All right, welcome. So in this video, I'm going to kind of cover auction market theory. Um, I'm going to kind of go into a little bit more detail. I'm going to start off basic, and then we'll get into the more detailed stuff. So if you're a bit of a beginner, um, basically what I'm going to be covering for the first little bit of the video is going to be kind of running through the basics. Um, and then I'll move into getting into some profiles, and then we'll actually move into the charts and then see how to actually apply this. But I think it's really important for people to understand, what they're trading and logic behind it, and that's kind of what this theory exposes you to, which is why I believe it's very good to actually understand that. Because I mean, even if something works, it's very good to understand why it works. And you kind of develop your own thought process in a way, um, which can lead into you actually discovering new things, which is where you find an advantage. Um, and that's really what you want in trading. So first things first, right? What actually is auction market theory? I kind of constructed this presentation pretty quickly. I'm gonna try to do some drawing on it, um, but I'm gonna just kind of explain what it is. So very simply, auction market theory is the idea that the financial markets function as an auction. So very simply, think of like a car auction, right? Um, where prices kind of moving to facilitate trade between buyers and sellers. So right, if somebody wants to sell a vehicle, there has to be a buyer. So um, it's this sort of two participant based auction. Right? That's simply what an auction is, and that's what trading is, right? It's a transaction between buyers and sellers. Um, and it's basically the thought that markets are constantly searching for fair value, um, which is a price where both sides agree, which I will get into later in this video, and then move away from it um, when a balance occurs. So, primarily, right, this is your thought process. Simply just that. It's pretty shitty handwriting. I'm kind of a little disabled right now, but that's kind of your thought process, right? What the theory is in a sense. Um, Now, actually, understanding right the two-way auction, what I mentioned, it's basically just a continuous two-way auction, which is buyers competing to bid higher prices, or by bidding higher prices, and then sellers compete by offering lower prices. Um, so that's kind of where they gain their advantages between each other there. And this process creates movement as the market searches for agreement, right? So this kind of overall, however your markets move, right? All this is buying and selling, selling at these highs, buying at these lows, selling at this high, selling this high, buying at this low, buying at this low, selling at this high, buying at this low, selling at this high, buying at this low. And then like for example, continuous selling, or continuous buying. That's kind of how the auction functions, and that's what actually gives you the prices on the chart you're actually looking at. Um, Now we get into balance and imbalance, right? That's kind of the function of how the market moves. It alternates between these two conditions, right? So you have balance, which is kind of equilibrium. So it's basically prices rotating in a range, which overall looks like this, and then prices evenly distributed. So what that means necessarily is you kind of get this overall even histogram, right? That's what these necessarily are, um, right? So whether this is a market profile, whether this is a volume profile, it's overall the um, right, the volume or the time, whatever this is graphing, is evenly distributed overall. So an even distribution is going to be like a D shape, which I'll get into the profiles later on as well. But that's kind of overall what it looks like. And then with a balance, right, there's no strong actual directional conviction, right? It's pretty ranged. It's a very clean auction. You can kind of capture some buying from around here. You can kind of capture some selling from around here. Um, that's kind of where volume starts to begin to taper off, and then that differentiates kind of where buyers are stepping away at these highs and sellers are stepping away at these lows. And then as far as balance goes, which is disequilibrium, you kind of get this aggressive buying or selling. Now it kind of looks like this, or kind of look like that, right? It's this one way shape. Um, and then it's kind of just like a one directional move, and that doesn't need to be very one directional. Like it could be like right overall, but what is the actual direction? The direction is up. You're kind of going long here. That's what most of these traders are positioned. They're pretty positioned long overall. Um, they're a bit stronger with their pressure. Um, and then vice versa right here as well. It doesn't need to be perfect, but overall the direction should be bullish, which is up, and then bearish, which is down. And then the state that this kind of predicts, which I'll also explain a little bit later, we're kind of in search for new fair value, um, which is kind of what balance is necessarily. So when you're in a state of imbalance, you're going to be searching for a state of balance. Um, and that's kind of how the auction cycle actually repeats, right? So you get a balance, which is kind of appears as a consolidation. So maybe you kind of get something like that. You can get a little bit of a balance, and then you get a breakout, which is your imbalance. And now we're looking for, um, that's where we're seeking new value, right? This is what your price discovery phase is. So whether it's going to reach a previous balance, whether it's going to create its own, it'll kind of look something like this. Maybe it's creating its own, and then maybe it'll even come back up here and then find this own value. So, kind of what it did here is it balanced overall, first stage, okay? And now we imbalanced, right, your second stage. And then we discovered new prices, which is this phase. Um, and then we kind of created that new balance. And then what did we do again? We balanced, right? We imbalanced upwards. We discovered old prices, and now it's not a new balance, but technically it is because these are new prices. But it just found old participation, which is now occurring or reoccurring in the market. Um, so I know I mentioned fair value just a little couple slides ago. Now this is kind of what your fair value is. So you kind of get this even distribution. This is what a distribution is. So basically, fair value is the price level or zone where the market achieves the highest agreement between buyers and sellers, which is measured through volume and time spent at price. Now you have a volume profile, or you have a time-based profile, market profile, um, or time, price, and opportunity. So it kind of represents where trade is most efficient, right? You have that first standard deviation. So kind of a lot of logic that is used with your value area high, your value area low, or if you're using shelves, if you're using VWAP, right? A lot of this is what these are deriving from, that logic, right? You kind of get around the first standard deviation, which is 68.26%, often seen as 70% when you're trading, but also 68% is like what you should be using, but it doesn't really differentiate that much. But this is where the first standard deviation actually falls within. So this is kind of the majority of price where it's actually being traded within. Um, so you kind of notice how the overall activity, whatever is being graphed, is starting to fall. Now that's kind of where the auction comes in, right? This is overall where majority is kind of occurring. And what you'll kind of find often is around the value area high, which is going to be in this instance this, and then the value area low, which is in this instance this. That's often where the opposing side of the market is able to kind of come in and take over because one side of the market now is failure to continuing, and then we kind of continue in within this range. You also have the second standard deviation, and third standard deviation as well. Um, and there it goes a bit more deeper logic within second standard deviation, which I'm not really going to get into here. But second standard deviation works very well as well for like using shelves. But when you're actually using a value area, Whatever your percentage is, right? This could be, some people like to use 40, um, but with a actual bell curve, which that's where it's derived from, which is your distribution principles, um, which is also where you kind of overall have a um, normal distribution. That's what this is reference to. And then obviously, as I said, the majority of trading and it kind of activity, it's clustered around the mean. Now the mean is this, um, the middle average price point. Um, and then very simply, this gives you a measurable value area. Um, Now this bell curve, these shapes are also referred to as a Gaussian distribution. Bell curve, Gaussian distribution, whatever. It's overall the same concept. It's still a distribution. A bell curve, kind of that's where a distribution lies. So you may hear those two terms thrown around. It's all overall referencing to this overall concept. Um, So now price discovery. This is kind of your stage of the market where you're seeking new or old value, right? And this is where your imbalance stage occurs. So this is kind of where you get a fast movement. You kind of get a low resistance. Overall it's a bit not necessarily lower volume, but it's not overall clustered in a balance. And it's a bit of inefficient structure, right? It's not very efficient, right? Efficiency is based on accepting prices in a sense, very simply. So when you are an inefficient market and we're not being able to actually agree on any sort of price, it's going to find a range where it can. So you kind of maybe get this overall move upwards, and now it starts to balance again, and then overall this is where your new balance is created. But this move, which I'll take out red, um, this overall shape right up here, this leg, that's your price discovery, right? That's your imbalance. Overall, we were seeking new prices. We found new prices. We were able to now agree on it and form some efficient structure because we were able to agree on these prices up here. Um, Now, the value area and point of control. As if I go back a couple of slides, right, on fair value, when I said your value area, your standard deviations, um, the value area is where around 70% of trading volume occurs. 70, 68, but 70 is the most common statistic used in like volume profiles and whatnot. Overall, it's very similar. But it's that first standard deviation of your distribution or Gaussian distribution, or your bell curve. Um, so it kind of represents where the market considers price to be fair. And overall, you have, in a very perfect distribution, it would kind of look something like this. In a perfect distribution, you have your value area high, you have your value area low, which is the low of the value area, and obviously the value area high is the top of the value area. You kind of find the highs overall being formed around here, and then you find the lows overall being formed around here. So if we're inside the value area, we kind of have some acceptance of price, and then if maybe we're trading outside the value area, we have some rejection or expiration. So maybe we reject off of, and then we continue to explore prices. Um, and then you also have the point of control, which is the point where the highest traded volume is, but also can be like the most time spent. Whatever this profile is representing, it's basically the highest value in comparison to any other point. So, for example, right here would be your point of control because that overall has the highest peak. Um, so it kind of acts like as a magnet, and then price often typically may return to it. So this is kind of like your overall mean. Um, price can kind of chop around this price point. I don't really like to trade around the point of control unless we were to maybe reject off of it. But when it comes to actually placing a trade around it, you're kind of set up in a bit of a choppy environment, which overall isn't the best to trade. You know, you kind of want to get yourself on the better side of the actual movement. But if you find yourself being able to trade off of that, then you know that works for you. Um, and then getting to acceptance versus rejection. Um, so what acceptance is we kind of um, spend a decent amount of time actually like at a level. Um, you know, you kind of start to build value, you start to build volume, you start to build time. Um, so we're kind of, you know, in an efficient market. So you kind of get this rotation formed. Right? What a rotation is, you know, we are rotating from highs to lows, and then you kind of overall are agreeing on price. Um, so both sides of the market, as I stated earlier, the two-sided market, buyers and sellers are both comfortably transacting, right? It's a very stable market, and there's no actual urgency in seeking, as it's already found its value. So you kind of get this mean reversion from your distribution. Um, you know, it's just mean reverting from the highs to the lows, and then to the lows to the high. Um, Now, actual rejection. Rejection is can be characterized around um, very simply rejecting a price, where we can quickly leave a level. Now, wherever that level comes from doesn't matter. You know, if it's just any price point, um, that's what rejection is. Simply, you know, you reject fucking, I don't know, you reject an offer. Like, for example, if you know I give you an offer, you know, you're selling maybe a vehicle for $5,000. I give you an offer for 3,000. You know, you're gonna tell me no, that's too cheap. You don't want it. You know, maybe you get asked, or you ask a girl out. You know, she rejects you. You know, that's simply what rejection is. It is a rejection of a point. Um, so kind of in a sense, you know, maybe the rejection maybe looks like you have your distribution, right? We seek out of it, and then now we are you know, searching for some new prices. We come back to the value area low, and we're like, okay, we don't want these prices anymore. Um, so you know, they're going to reject, and then overall continue lower. Now the low volume is kind of characterized just because you know it hasn't spent a lot of time, and it's overall it's not in agreement. It's not very efficient. So it doesn't necessarily mean that volume overall is low, but the actual there's not much value to it in comparison. You have this amount of value. You know, this is a much greater time spent than this little chunk that you have here. So it's kind of disagreeing with this value, and then you know we simply reject those prices. Um, so you know that's very simply what this is kind of the basics of where a lot of your setups are going to come from, whether you're trading a mean reversion, which is one side of the distribution to the other. Otherwise, you're trading maybe a rejection of that value. But this is kind of like your derivative on where a lot of the common setups actually you know come from. You know, your logic behind them and whatnot. So as I mentioned earlier, I'm going to get into profiles. Um, there's a couple main profiles that you're going to use. Um, you know, maybe you already know some about these. You know, as we know now, this is a balanced profile. Overall, you have a balance created within it. Um, so you know, this is kind of where your fair value, your accepting ranges. You know, you have your value area high is charted here, your value area low, and you have your point of control. You know, the most significant point. This is considered a normal distribution, a normal day. You know, overall, what it could look like is maybe something like this, maybe just a little bit dip up, a little bit dip down, and but overall, you know, we're accepting majority of these prices. You know, we had a rejection up here, we had a rejection up here, but we're able to come back and continue to accept these prices. So you kind of get this balanced form, this range, which is these are kind of where you know, when you're using a value area high and a value area low, these are where your most probable um, levels for that will actually come from. Maybe whether you're using the edge of the value as well, maybe nearing your second distribution or your second standard deviation. Um, Overall, this is what a balanced profile looks like, a very normal day. Um, Now you have two more main shapes that have some correlation to a distribution, or I mean a balance profile, right? Overall, you could say this is a balance and this is a balance, right? But overall, your entire profile is looking something like this, which is like a P. Um, and then you have, your lowercase b. Just fix that. The font automatically uses the uppercase, but you have this overall B-shaped profile. Um, So overall, you could still say that maybe the upper side of the first one is balance, which it is, and then the other one you say the lower side of the balance, um, which it is. Um, so overall, a P-shaped profile kind of represents some short covering possibly, which is like some trapped sellers exiting, not necessarily, but overall, some buyers containing control. Um, So you have a bit of like an impulse movement down, and then we come back up, and we start to range. Um, so the thinner area is most likely an imbalance, and then wherever you have the heavy volume, which is where your balance is, that's your acceptance, where we were able to actually form a efficient environment, and then get this balance actually created. Um, and then um, Although you may think that this is like some strong buying, that's actually not true. Um, Overall, they can kind of be like forced buying just from shorts. Um, so we're not like it just doesn't indicate that fully. But these shapes can be formed anyway. Um, and then as far as the lowercase b goes, um, this is kind of a long liquidation where kind of you have some trapped buyers exiting. And then overall, you have some sellers in control for a little bit of the profile. So you kind of have this thin upper area, and then you have the heavy volume at the bottom, where now these sellers and buyers were able to agree. Um, so you can kind of trade. You can still use these. These are just the shapes. I don't really characterize these with context as too much. Um, it's more overall to understand what these shapes can kind of mean and indicate. Um, I'm not personally going to get into something I don't really fully use, which is actually like maybe fully using these profiles for context. Um, which obviously, you get context from your balance area, which is what I will personally get into. But as the actual state of what these indicate, I'm really just covering what I actually recommend. Um, there's a little bit more that you could use off of these, but overall, this is all you kind of want to focus on is that balance area created, and understand of how it was created. And then we get into a B-shaped profile, which is a double distribution. Um, Quickly, which I'll explain in another video, in my market profile video. You kind of have this distribution gate, right? It's the difference between or the in between point between the two distributions. Um, so um, Overall, you kind of had a bit of an auction created. So you kind of have these two distributions on the profile, these two ranges. Um, Kind of just indicating 2 points that we were able to kind of form on the day and actually accept price. So overall, you still had a bit of a balanced day in one little imbalanced leg. Whether this could be vice versa, and then maybe the low came first and then the high came second, or the high came second, or the high came first and low came second. However it's formed, overall you still get two distributions, which you can then use levels from, and then trade beyond that. And then you also have the POC, whether this one's higher or this one's higher. In this case, let's just say this one's higher, so this is over your point of control still with that profile. And these are all like reference to like perfect distributions, like what these would perfectly look like. I'm gonna get to some actual examples of what they're shaped like, which is a little bit differently, actually on the charts. But let me get into some actual setups um, now, which are the three main things that we have here. You have acceptance, rejection, and a failed auction. Um, so very simply, I know I've already discussed acceptance or rejection, but we also have this failed auction setup. Um, um, you have the 80% rule. Now, I didn't necessarily make um, a separate slide on the 80% rule just because overall, it's not actually a hard statistic. Um, it's more so just like a rule of thumb. But the baseline is if we can accept into this balance again, right, what we did here, the chances are once we accept, we're going to reach the other edge, which would be your value area high in this instance. Um, Now, typically, I would overall cover the 80% rule, but it's not actually a hard statistic, so I don't want to like mislead people. Um, just because if you don't understand acceptance to the full extent, you're kind of just gonna blindly be saying, "Oh, now we came to here. Now we have an 80% chance, so I have an 80% room weight." Like that's not how it works, bro. That's retarded. It simply doesn't work that way. It's more so just a rule of thumb, and that majority of the time of once we accept, we should be able to reach the other prices. And it's obviously not just based on one little market function. Um, but as far as that, that kind of covers majority um, of what my slideshow will contain. Now I'm gonna get into the charts, and then we'll actually get into some examples here. All right. So I'm gonna start on TradingView for this instance. I'm going to kind of give some examples of what a balance profile looks like, what a P-shaped profile. I'm kind of just going to get the examples here overall of profiles, um, and then what some other days look like. So to start here, we have a balanced profile. Um, Now, very simply, you have your rotation from around the value area high and value area low. Now, as I will quickly note, right, your value area high, even though, you may think that that's where most of the highs will consist of, well, very simply, um, it's not. So this is kind of where actually using shelves on a profile, which would I would personally draw it around from here to here, maybe like around here. This is kind of where your second standard deviation of the profile would lie, which is why I said earlier, it goes a little bit further than the first standard deviation. The first standard deviation still consists of a lot of volume, and oftentimes like isn't going to represent where a lot of the highs that were actually set, because it is just a measurement um, of the total volume traded, and then the majority of where that sits. But overall, this is kind of what your balance profile is going to consist of. Now getting to this profile, this is kind of what your B lowercase b shaped profile will look like. You get overall this lower distribution. And then as you can see, maybe a little chop in here, kind of come down, come out of it, and then we actually reject prices, and then we come back in, accept prices again, and then just auction from there. So this is a pretty good example, what of a breakout and then a rejection setup would look like. But obviously, that's not necessarily um, fully what occurred here. But what I will say is this is kind of where you use old profiles leading into new days. So I'm going to just mark out this box here as our balance area. Now I'm going to turn off this indicator, um, and I kind of want to show you um, what we kind of react from. Right. So at the end of the day, you get your profile created, and now what do? We get this leg out, and then overnight we start to reject these prices. One rejection, and then second rejection. We can't really accept these prices again. So overall, you can trade that rejection, and then maybe trade it again. We're still not accepting prices, and then we kind of begin to accept prices once we fully dip in. As we see now, this is kind of where our point of control lies. Um, Around the mean. Now, as you can see, we kind of chop around it, and then we actually ended up reaching this lower shelf again. But overall, like that's kind of what your rejection setup would look like, and as far as your acceptance setup could go as well. Um, these type of days, I didn't cover this in the like profiles, but you have these also imbalance trend days, like a full imbalance, a full trend day. Um, these there's not really too much about it. I wouldn't use the value or highs. I wouldn't use the value or lows, in my opinion. I mean, you could. I personally don't. I personally don't use value or highs and value or lows, anyways. But overall, when you're picking your value or your highs, value or lows, or when you're picking your edges, it should be an edge of a balanced shape. So, it's kind of what you're hoping for. And then on this day as well, this is also this is where your P profile is going to kind of look like. Now overall, it's not the best, and I'll explain why that is. Even though you still have this P-shaped profile, this bit of upper balance, right? The reason that this didn't have more volume is because this was overnight. So when you're using a full day profile, um, you know, you kind of lack um, you don't really lack, but you kind of also kind of got to factor in that, even though time was spent here, a TPO or market profile would kind of represent this like a little bit differently because it still had time spent. Like, and they were pretty much equal time spent, but the volume was just because the New York session or RCH, it overall, as we know, has more volume. So you kind of can get these profiles shaped from it, even though maybe on a market profile, you know, that's not really what we did. Um, but those are like your 3 and 4 main profiles that you'll use distributions from. Um, Now, I kind of want to get into some examples, and I'm not going to do this um, in a very like I'm not going to go and look on these profiles because these profiles were formed on this price. So I'm going to take profiles that um, you had balances from. I'm going to draw those out. I'm going to map those, and then we're going to actually look at setups that worked out off of them. So the first one here that I notice very quickly, I'm going to just mark out this balance. Um, I'm also going to mark out, I'm going to be marking out the value area highs and whatnot for this as well. And then I'm going to mark out that one as well. Now, what I'm going to do here, we'll turn off our profiles again. And as you can see, you can visualize just very simply, that's what a balance overall looks like. And then what do we do here? We open, we gap up, and then we come seek lower prices, kind of get this choppy trend down overnight, and then we actually reject these prices. We can't accept into this balance, into this range. We accept prices and we continue higher, and then we create this imbalance, and then maybe seeking old value. Um, so very quickly, I want to go ahead and actually draw a profile just to kind of show, um, this overall balance from this kind of range. What did we actually do? I'll map this a little bit further. Overall, this is your value, your high value, your low. What do we actually do? We came up, we sought out, found new prices, we actually accepted into it, and then we rejected around the value or high or the edge of it, right? You kind of get that rotation now. We came from here, we were able to reach that, your 80% thumb of rule. We reach it. That's your probable chances, and then we try to come down here. We don't always reach the value area low. It's kind of an estimate of a zone, and then we start to balance and then chop. But like this is a very good example of how you can utilize a rejection and then seeking new value, and then actually once it accepts into it. So for example here, if, this is obviously hindsight, but like I haven't looked at these charts at all, so I'm kind of just going based off of how it works. But maybe a little bit of a stop loss. Maybe you trade here, and then you could have first sought out this most recent balance, um, and then maybe even once we accept, even target higher. Um, but that's kind of how you can utilize those. Another decent example here, right? You have um, this balance created that I drew out. And then what do we do here? Right, the value area low actually is a little bit lower. I did not see that. There you go. So what do we do here? Um, this is kind of what your rejection setup is going to look like. As I like a perfect rejection setup. You kind of get your balance created. We come out of it. We come up and attempt to accept back into it, and then we rejected the value area low right here, and then we continue lower. Um, like this is kind of what your textbook rejection setup would look like. And then, for example, maybe we sought out lower balances. This is kind of an imbalance market, so maybe balances came from here, but or we formed our new balance. But overall, it was kind of shitty, choppy, as you can see. Um, but that's kind of what your textbook rejection setup would actually look like. Like that's a perfect example. And then you enter your imbalance price discovery phase, and then that's where you continue from. And then also, a lot of people think you need these profiles to visualize, balance and imbalance. You don't, and I think it's honestly better off if you kind of try to visualize it without a chart. Because as I explained in my volume profile video, you know, where the edges of value is, are you want to use for yourselves because there's more highs and lows that are consistent there, or more precise highs and lows. Um, So, if you kind of just visualize, where maybe some balances are created, like this one, for example, this profile I drew this myself, and I stated that this is kind of what a balance would look like. And then overall, that's that's your balance, it's a range, but this is just a leg up, that's your imbalance. So what you can kind of do with this is very quickly, I'll just remove these drawings, but you can kind of draw from here to here, maybe that's your balance. I'll just change this to like, see, I don't even know what I have all here. Maybe that's your imbalance leg, and then you have your balance. So that imbalance into a balance, and then this is kind of shitty. You have a little bit multiple like some micro balances, but overall you kind of get this imbalance lower um, again, and then we kind of create a little bit of balance, kind of do the same thing, balance again, um, and then so forth. Like this is example. Um, you have an imbalance here as well. you have another imbalance leg up, and then another imbalance leg. And then what do we actually do here? We start to create a former balance or minor balance. And then we imbalance again all the way until we start creating a little bit of a micro balance. Um, we get another imbalance move down. We range a little bit, another imbalance move up, and then we range a little bit all the way up to our current day. And you can do this on any time frame. You know, you have your micro auctions, you have your larger auctions. You know, it doesn't just need to be a specific time frame. Time frame doesn't really matter. An auction is an auction, right? Whether you're using a micro auction, micro balance, um, or a larger balance, like at a larger scale. Um, but overall, you know, you can pretty easily visualize what balances and imbalances look like. Then obviously, you know, your volume profile gives you some of those statistics of your value, your high, your value, your low, your point of control. You know, whatever you're gauging from it using their volume profile or market profile, whether it's time based or volume based. Um, but you're kind of still seeing overall the same thing, whether it's a time based chart um, or using an actual profile, which you can do the same thing. Um, but as far as what I'm going to show on TradingView, you know, that's overall what these kind of setups look like. You know, what your failed or actually I didn't cover into failed auction fully. I'll get into that. But what your overall rejection and acceptance setups look like. Um, and then I'll move over to see your charts here, and then also use some more examples, and as well as a failed auction. All right, so moving into moving into CR charts over here. Um, this is just a market profile. I have a separate video on this, and then I also have a volume profile up here. This is just a split day volume profile, Globex and RTH, um, your overnight session in RTH. And then you also have a full day market profile or time price and opportunity chart. And I also have a volume profile here, and I also have these larger volume profiles. Um, But overall, you know, you can kind of visualize with your histogram. You know, you have your distribution, you have a little bit of distribution. You kind of have this bit of a distribution in our current day. You know, that's a balance. You know, you kind of have an imbalance within here, though. You have this bit of an imbalance. You know, you can still visualize the exact same way um, here. Um, and like for example, um, kind of what we do here. Um, you get, see here, you kind of get your bit of a balance. And then, you know, you kind of accept lower prices seeking down to this balance. We can mark from there all the way to there. So we kind of reject from the POC, reject again around this E period, reject the high of it or the value area low, and then we seek out these lower prices. We even seek out down to here, and then you know this previous balance. You know, we can accept into it. At first we rejected, but you know, we continued lower. Um, Overall, you know, you can gauge the market profile. And then also, you know, this is my volume profile. Same thing that you could also see on my market profile over there. But overall, you know, you still get the same thing, you know, right? A distribution. You know, you get this range. Um, you know, you have a little bit of a distribution. You know, you have a little bit of a range. You know, that's kind of what you're visualizing here. And then where you see these thinner volume environments, you have these imbalance legs, right? As I said, you know, this is kind of your imbalance, right? Very thin, very low volume in comparison to a larger time spent area. Um, like for example, here you have a bit of upper distribution and you have your lower distribution, and then you have this imbalance leg. You know, this is your distribution gate. Um, and then, you know, that's overall, you know, a double distribution as well. Um, and then you just play off of these um, using AMC. Um, Now, as far as an actual failed auction goes, something like this, would kind of be your overall failed auction setup that I would personally use um, if you're using it at full scale. So you kind of get this balance formed here. We kind of, create this range. We come out. We can't auction these prices here. This previous balance. Um, it's kind of a shitty balance, but if you kind of just quickly visualize with me, um, you have from around here and then around here as well. If you were to combine that, you kind of get a little bit of this balance. We reject these prices, and then we can continue lower. And then around here, we reject. You kind of auction these prices. We don't overall fail. We kind of continue, but you kind of still get that failed auction setup overall. And then maybe you fully complete a failed auction. Otherwise, you just continue lower prices. Um, but this kind of rejection failed auction setup, that's coming from a balance. Come out of it, we failed to auction off these prices from a previous balance. And it necessarily should be a previous balance because when when you're not using the actual setup, um, like if you were to continue here, that's your failed auction. But you're still using an actual balance, an actual um, efficient auction. You can kind of still use the same logic overall. Like we rejected from it, and then we accepted back into this previous balance. You kind of get your chances to move to the lower extreme, and then maybe continue lower. But definitely, it still should contain of something of a previous auction, and then you kind of get your setup to do whatever else from that. But overall, that's pretty much what covers all the main things of auction market theory, and then actually how to apply it. Um, Now, I'm gonna have a separate video on contextualization, like how you form out context. But it's very simple of just using these setups and then playing from balance to balance, and then visualizing: are we in a state of imbalance? Are we in a state of imbalance? That's overall your goal. If you're in a state of balance, try to trade the rotations. Otherwise, maybe look for a failed auction. Maybe look for a breakout and then a retest and then lower. However you plan it out, you're still using the same setups that I've covered in the slideshow as well. And then, you get everything else from it. And then you can use a market profile as well to do the same exact things. So whether you're using time or volume, you're still getting the same auction represented to you. And then you can also use higher time frame profiles like these ones. You have your higher time frame balances. For example, um, you have this entire balance, and then you kind of come out here, failed auction, accept back end price, and then reach the lower edge. You can use these balances as context as to maybe like, did we accept into it, and then can we like, are we bullish until we reach the upper edge, or are we rejecting from it? Maybe now we're going to continue lower and maybe find some lower values as well, which I will go a bit more in depth onto that and examples. But otherwise than that, that pretty much covers um, everything. But with that said, I would also kind of like to go into a little bit of the importance of understanding like why. I know I said this at the beginning of the video, but now that you kind of understand how, like, the theory and the logic behind some of these things, which you can also go further in depth to on your own. Now you have a basis of understanding on actually how these markets function, which can develop a bit more of your thought process, and then maybe the reasoning for actually placing a position, um, or doing whatever. Um, but I do think that the logic behind something is very, very important. Anything that I try to find, maybe even like, when you trade ICT, whether you trade support and resistance, anything you trade, there should be some sort of logic behind it, which is kind of your statistical backing, historical backing, um, and the actual reason for it to work. And since we do know that, we are trading an auction, which also of course, you have, if you get into macroeconomics, you have, institutions and algorithms, but very simply, you have this auction, which gives you a basis theory and basic understanding of um, how these um, markets move and why. Um, but the actual very simple auction, that is a bit of a separate topic. But actually using the theory and applying it to something like a volume profile or a market profile, this is kind of what you would cover. If you get into actually the auction is a little bit of a separate topic. Um, understanding the order book, understanding how transactions occur. Understand that there has to be a buyer for every seller and a seller for every buyer. Just because you see a move, that doesn't mean necessarily that there's more buyers. There was just um, more most likely like aggressive buying, in a sense. Um, or maybe more passive buying, um, which that's a whole other topic to cover. But as far as like the importance of the applying it to a volume profile, and understanding or applying it to a volume profile, market profile, and actually understanding its usage, that's pretty much everything. There will be more on market profile. There will be more on contextualization. I'll have some lectures regarding shit as well. But like always, if you have any more questions, you can always just hit my DMs. Um, Everything can be found in the description of this video, or on my channel. I'm kind of just uploading as much, or not as much, but what the information that I can cover. I'm trying to really push out what more than most people will give out for free. That's kind of the goal here. Go more in depth, which will kind of be graduated over every video that comes. I'm not just putting it all into one video. With that being said, if you need anything, you can always hit my DMs, and then there's more to come. Otherwise than that, that wraps everything up. So you guys have a good one.